What are some of the best investment options for expats in 2025? Well, in this video, I am going to break it down. Living abroad often means earning more, paying less tax, and having access to global opportunities that people back home simply don't. But when it comes to investing as an expat, the choice can feel overwhelming and risky if you get it wrong. In this video, I'll break down the best investment options for expats right now, from global ETFs and offshore bonds to property, private credit, and alternative assets. Plus, how do you choose what's right for your goals and your location, i.e. where you are in the world? So, let's get into it. We'll start with the basics, offshore investing done right. Before we go into any specific assets, the first rule of expat investing is structure. What kind of structure are you going to use? Most expats don't realise that where and how you hold your investment can be as important as what you invest in directly. So you want to be using regulated international platforms. Look for providers that are licensed in strong jurisdictions like Singapore, the UK, Hong Kong, the Isle of Man, Guernsey, Puerto Rico. There's many out there, yeah? Avoid unlicensed offshore schemes that promise high returns but hide high fees. That's really important. Think portability, portable. Choose structures that remain valid if you relocate. Many expats move every few years. There's very few that just go to one location and stay there for the whole time they are abroad. Many move home, so make sure you understand how that impacts you when you return to your home country is also vital. Match currency to your goals. If you retire in, UK, investing in GBP makes sense. If you want to retire in Spain, you want to be looking at euros. If your long-term plans are in Asia or the US, then you want to align those currencies to minimize the currency exchange risks, which can be huge over time. Just look at, again, like a GBP USD chart or any currency chart for that matter. There's a lot of fluctuation. This part, core investment options. Now, let's look at core investment building blocks. And I've kind of broken these down into, 5 main kind of areas. Global ETFs and index funds, a simple, low-cost way to build global diversification. You can track the MSCI, the S&P, there's a whole number of different things that you can do. Or track, should I say. You can even look at emerging market ETFs, trackers, etc. Really low fees, and they're not actively managed unless they're held within a managed portfolio, which brings me on to number 2, managed portfolios. For expats who prefer professional oversight, actively managed portfolios can help you adjust for market cycles and protect against the downside. If you've got someone in your corner or advising you that when markets start tanking, you've told them previously, look, I can only stomach a certain percentage drop before I want to move out into cash. That's really valuable, in my humble opinion. Then you have number 3, bonds and fixed income. These provide stability and predictable returns. Might not be the most exciting, but they are good in volatile markets, especially valuable if you're saving for something near term, or you're approaching the point in your life where you're looking to start drawing down from your investment. For property, many expats invest in real estate in their home country or overseas. Remember, property is illiquid and taxes can vary depending on where you live and what you own. And I've had a really bad experience investing in off-plan property. I'm going to cover that in a video. My God, I lost all my money. But anyway, that's another story that I will feature, because this is an area that you need to be ultra careful about. And it is marketed heavily in the expat space. You also have cash and, time deposits, holding, and also multiple currencies as well. You can hold on deposit. Holding multiple currencies can help you hedge against inflation and exchange rate risk. Look for high yield savings options or time deposits in stable currencies, and that would be like the majors. That's kind of like your GBP, USD, Aussie dollar, Canadian dollar, New Zealand dollar, Singapore dollar, I guess. And that's really worthwhile as well, looking at what options are available to you. It's kind of like a no risk return. If you do need to access the funds within the designated time frame, you may lose the interest, but you will still have access to your capital, and your capital will be safe. Then, you've got advanced and alternative investments. These are more for sophisticated expats. Diversification doesn't stop with what I've mentioned above. When I say sophisticated, I don't mean that in a way. It just means you really need to understand what these investments are before you take any action with them. And that would be like things like private equity and private credit. These give access to institutional grade opportunities and can outperform public markets over the long term. As always, the devil is in the detail. You've got things like art, wine, whiskey casks. I'm from Scotland, you can probably tell. I've done really well with that. And again, that's an area that you really need to understand what is happening and how to approach it. Tangible assets like whiskey can preserve value in inflationary times. If you go on to the Office of National Statistics, whiskey inflation is around 5% per annum on the dram. And also, if you get a brand, there's brand equity, there's maturation growth. I really like it. It's tax efficient if it's structured properly. And the same goes with wine. Wine's a bit more delicate. You have to be careful in the storage process. It's very temperature sensitive. There is a lot of it. I'm not really a wine guy, but I know a bit. But it depends a lot on the harvest that year, like the rainfall, the grapes. Whereas if you're looking at whiskey, it's more about just a distillation process that's consistent. Would probably be how I put it. And then you can look at things like venture capital or angel investing. If you're in a strong income position, investing in early stage startups can be high risk, high reward, but only if done through credible vetted platforms. I guess to finish up, the goal isn't to chase every shiny opportunity. That's just going to get you in trouble. It's to create a balanced portfolio that grows across multiple markets with a bit of currency diversification if you need it, and different asset types. So let me know what you think. Leave a comment in the comments box, like the video, subscribe to the channel, drop us an email at info@expatmoneychat. Thank you for watching. Much appreciated. Cheers.